We kick things off with a tariff takedown. That's what it was. Stocks tumbling today, late today, as President Trump turns up the heat on the trade war with China. The Dow giving up a 311-point gain to finish the day deep in the red. We have full team coverage of today's dramatic turn of events. Let's begin with the latest out of the White House. That's where Eamon Javers is live for us in Washington once again. Eamon?
Yeah, Scott, the president just talked to reporters on the South Lawn. He was asked if he was concerned about that stock market tumble that you were just talking about in the wake of his tweet about the China tariffs. The president said he wasn't worried about it. He, in fact, expected it. And he said it's because people don't fully understand what his tariff strategy is. In fact, the president here blaming the market for not understanding exactly what his approach is to tariffs and to China. He was also asked by me exactly why he picks 10% as opposed to 25% or 5% on the tariffs. Here's what he had to say.
I did more than anybody thought with the first $250 billion, and the 10% is for a short-term period, and then I can always do much more or I can do less, depending on what happens with respect to a deal. But I'm very happy the way it is right now.
So the president there is saying that he could go up to above 25% if he felt that was necessary, but he said he doesn't see that as being necessary at this point. So that puts a lot of tension now on those negotiations between the U.S. side and the Chinese side here in Washington in early September. The president was also asked an interesting question if he's considering a blockade of Venezuela. He said yes, but it was just a one-word answer. He didn't offer us any real detail on when that would begin, how it would work, why it's being put in now. But the president did respond in the affirmative when he was asked if he was considering a blockade of Venezuela, guys. So that's something else to chew over here in terms of the geopolitics around all this.
All right, Eamon, thank you. That's Eamon Javers live North Lawn of the White House for us once again. All right, let's trade it. All right, Guy.
Yes, sir.
You
welcome,
guys are the ones.
Welcome.
Yeah. You guys are the ones who get paid to figure all this out. So we got a tale of 2 days. Guy. You got a tale of 2 days. Everything seems copacetic, as they say.
When? Oh, earlier this morning. I thought you meant yesterday and today. You mean today there was the tale of 2 days. Thank you for my clarification.
And then you have this tweet late in the afternoon that caused an instant reversal.
Yeah, makes sense. I mean, I thought the market should have been down today anyway, but that's a horse of a different color. I think the president, this is my opinion, I think the president, we talked about this, is trying to force Jerome Powell's hand. I mean, the Fed chair yesterday said, you know what, one of the biggest risks to the market is more tariffs. What does the president do on the back of that? Levies more tariffs. Steve Leisman pointed that out in a tweet today. So, again, he wasn't happy with a 25-point cut, wants another one. Maybe he'll get it, maybe he won't. I happen to think the market's starting to call a little BS on this, and that's why I think there's further downside, Scott.
Yeah, Grasso, how do you see it?
I think it's kind of... Who is he putting more pressure on? Is he putting more pressure on Powell, or is he putting more pressure on or China? He's putting pressure on both of them, and you get this dark period where you're not going to hear from the Fed. Earnings are almost done. So what do you have to look forward to? What do you have to be afraid of? So I think it was kind of genius on his part to do this, and then he backed off it immediately, which I wish he did not back off it immediately, saying this is only a temporary thing. Then why do it? You know, you take the bite out of it 10 minutes after he did it. I thought was the only thing that he did wrong in the process.
And the other thing about the earnings is this, that this has been with us for a while. If you look at the earnings quarter to date, companies that do more than half their business outside the U.S. down almost 14% versus companies that do more than half inside the U.S. actually up. So this problem that's been with us is now just being accentuated. This is just fuel on the fire.
Now you have to rethink every way that you feel like you're going to play this market?
Well, it's funny you say that, Scott, because it's, first of all, I agree with Guy. It's like, see, I'm going to get my extra 25 bips right now.
I'm going to get it one way or another.
I'm going to get it. I'm going to get it. And then, oh, boy, I guess trade does matter. Because, in fact, when you combine trade with a Fed that really, you know, we graded the Fed yesterday, but either way, we all agreed they had a tough job ahead of them in terms of what went on yesterday. So ultimately, look at what responded. So let's get to the market. What actually responded?
What didn't respond?
Well,
wow.
and you know, so for people that just straight off of Apple, let's go to the name that we've all been talking about for the last couple of days. I guess Apple might be a trade war stock. After all, I thought it had decoupled, and I'm being a little facetious, but I do think you have a case here. You know, look at Win, look at emerging markets.
Look at CAT, look at retail.
Right.
Oh, my God, some of these retail stocks got obliterated after this tweet. I mean, it was stunning.
Well, and I'll just simply say that I think the same playbook is probably at work here. Look what was very defensive, Starbucks, McDonald's, mega cap tech. When in a lower growth environment where you have a valuation argument, look at Google, look at Amazon, look at Microsoft today. Those were names that were stalwarts.
But when Guy opened up saying that you thought the market should have been down, people underestimated stopping QT now, what that does for the overall market. That's why the market was up, in my opinion.
Yeah, do you think the market overreacted yesterday with trying to figure out exactly what Powell was saying?
Trying to figure out where it was. You have to remember, QT is, in effect, raising rates every meeting. So if you don't have it, you don't have them cutting, but it's almost cutting by proxy. So you have them cut the 25 basis points, then you have the QT being removed. That's almost the 25 from December, and now you get another 25. So you sort of did get your 50.
The net of it is that this is all just more of the same narrative. Just think what you said. It's idiosyncratic growth, continuing. So as money hides in fewer and fewer names, as banks have been underperforming for 3 years, industrials, it's all the same story. It's just getting more pronounced. And that's never a good sign.
I literally, I'm wondering, do you need to rethink the way you now play the market if you think you're going to get these tariffs in a month?
Well,
it changes almost everything now.
Yes and no, because I think, or at least I had thought, we were going to get those tariffs or something like those tariffs in a month 4 months ago, 5 months ago. And I think it comes down to it's still about the Fed right now. I think we're still digesting a mid-cycle adjustment. And I think that's a more important dynamic for the market because I think the trade at some point, we don't even know how you win the trade war. We don't know what the terms are of the trade war. I think we're back to where we were. This is what I thought,
though. Why wouldn't you raise the tariffs in October 1st? So you force the hand from Powell for September meeting versus September 1st. If he doesn't do it, he doesn't have to cut. Right? I mean, why not wait? Give yourself an extra 30 days. If he's delaying it now anyway, just push it off to October 1st.
The thing that's concerning for me is the way the market's responded. Look at dollar yen, which is ultimately a proxy for risk. So you had 1.5 handles on yen stronger, which means watch 107. We break that. I think it gets very dangerous. 189 on the 10-year. This is the low. This is a level on the 10-year bond since before the elections. So we went to bed the night of the elections, and we actually had a 10-year around these levels. We woke up the next day, and 2 days later, we were moving higher. We've almost cut 10-year yields in half since November, and that, to me, is ultimately the barometer of what the market really thinks about growth.
What do you make of the move in oil today? That, in and of itself, would be the lead of this show, the fact that WTI and Brent were down by such a large amount. Yep. That's stunning in and of itself.
Commodities in general. I mean, you're getting the message in a comprehensive way that there's something very wrong.
What I was going to say was quickly.
Not to mention dollar going up is not great for commodities.
That's what I was going to say. I mean, don't discount for a fact that the president's not, with this tariff talk, is trying to somehow ratchet back the U.S. dollar that he's clearly concerned about. And one of my big concerns will be, will they, being the administration, pull the trigger and somehow intervene in the U.S. dollar, which to me would be madness at the highest level, and quickly, without getting really down a rabbit hole, the Chinese yuan is at levels where we probably right on the edge.
Yep.
And the last time we saw it around these levels was August of 2015-ish. And then go back and see what happened in the ensuing months.
Remember the summer of 15?
Of course, that's why I brought it up.
Ugly.
But it only speaks to the mismessaging of Powell, where you have the dollar on a cut. You have the dollar rally. So the market didn't know what to make of Powell's cut. It was a hawkish 25 basis points, and that to me.
But isn't that what the Fed wanted?
I mean, I don't know if that's
that
what
was yesterday's event, but if you think about it, the only reason the dollar is rallying is because it's the appearance or it's the view that central bank differentials are much wider than people thought 5 minutes before that meeting, which is that actually the Fed is not going to be as easy as the BOJ and the ECB. And by the way, we hope they are not, because that is not policy that's worked.